Hi there, welcome to Kneppy Invest and welcome to March 19, 2025. Pretty good day for me personally. I went for a run this morning. First half marathon length run I have achieved for over a year. I injured myself in February of last year and slowly on the recovery path. And I've just been slowly increasing the lengths on my runs, and finally today I got to 21.12 kilometers, whatever it is for a half marathon, and it was fairly slow, but that's a great achievement for me as I go through the recovery process. So hopefully maybe another year I can do a marathon, hopefully, maybe, if I feel like. Anyway, so pretty good day for me. Now, because I did that and I have been busy doing other things as well, I haven't had time to go through my emails because I do get fair few emails just to see how we have performed today. With the news flow, macroeconomic news, why Wall Street was down significantly, Nasdaq was down 1.66%. Didn't go through Twitter either, so have no look at anything like that. Although I did bookmark a tweet the other day, which I haven't had a look at, and in fact, let's have a look at this bookmark just to see if I want to talk about it. It's in the more bit. Bookmarks. Oh, yeah, okay. This was about Tesla investors not happy with Elon Musk. Definitely understand it because it seems like his focus is not on Tesla, it's on something else. So the larger shareholders in Tesla are not happy with Elon. Capital, that's right. Capital flowing from US to Europe. That's interesting. And oh yeah, Portugal cancelled some F-35s from the US. I don't really think I have to go through those. So let's not. So the agenda for today's video, since I'm not going to be looking at any tweets, we'll go through the ASX today, looking at the best and worst performing sectors, indices, and also companies. And then we'll have a look at the top 5 stocks of the day. 2 companies released their results today, half-year results. One of those companies' share price is up about 20%. Fascinating company. Well, maybe not that fascinating, but the share price and the valuation of the company has been completely smashed by the market over the past few years, and I think this could be a turning point for that company. And if you buy some shares in that company, you could be buying at a really good value if you buy shares in that company. I haven't decided yet because the chart still does not look that healthy or that good. So we'll talk about that company. Also, Myer Holdings released their half-year results. Almonty announced a deal with a US defense company or something. MinRes, one of the trucks tipped over or something. And also a company that's gone into a voluntary administration, Bluechiip. So those are the top 5 stocks of the day. WiseTech just missed it, would have come in at number 6. They had some sort of, I think it was something to do with these investigations into Richard White's whatever he was doing, his bad things he was doing, he's bad. And I think one of the things they mentioned was he got a little bit of a slap on the wrist. Don't ever do that again. Anyway, he's too important for the board to do any significant actions on him. And I won't be talking about WiseTech again today. I don't think the share price has been affected either positively or negatively. Let's have a look. Yeah, it's only down 1.85%. And yeah, then we'll have a look at some of your comments and questions. Now, onto the ASX today, and just based off here, we are starting to see a bit of a drop in the market today, which is really interesting. I did expect us to be down a fair bit today, and the market was down. XJO was down about 0.5 to 0.6% on open. But we actually did see a rally during the first half of the day, and now we're starting to see the market drop. Not sure what has caused that. We'll have a look at that. But you can definitely see, if you can notice on the market index homepage here, they do have 5 indices at the top here. And you notice a few of the indices, in fact, except for small caps, the other 4 indices were actually up halfway through the day. So that's interesting enough. So let's have a look at, yeah, look at that. So a nice little rally in the first half, and we've started to see the indices drift lower during the second half of the day. So you could say that's a little bit bearish. Maybe it's US futures. A pretty bad day on Wall Street overnight. NASDAQ was down another 1.66%. Dow Jones was only down 0.62%. And we tend to follow the Dow Jones Industrial a little bit more than NASDAQ, usually, not always, but usually. Anyway, so interesting day on our market today with a sort of recovery and then a little bit of selling during the second half. Best performing sectors today, well, only really one, and that's healthcare, up 0.47%. Everything is either flat or down. And funnily enough, we've got 4 sectors, in fact, 5 sectors down by more than 0.5%. 2 sectors down by more than 1%, real estate and utilities. So if you just have a look at the sector performance, a pretty negative day. CSL is up about 1.5%. So that has actually helped lift our market up a little bit otherwise. If you have a look at the indices, yeah, all in the red. ASX 20's had a pretty negative day. Gold's had a negative day as well. So we have seen over the past week and a month that gold has been the driving force, maybe not the driving force of our indice, but it has been the one shining light. In fact, in the past month, gold is up 6.64% and everything else is down significantly. If you have a look at 2025, gold is up 26.22%. And everything else is either down or up slightly. So gold has been the shining light. If we have a look at the ASX 20 today, is down 0.25%, so not a lot, but it's still down. And it was up, yeah, between about midday and 1. It was up, so it looks like all the traders were very positive in the first half. They went to lunch and they had a bad lunch. Maybe it gave them diarrhea or something. Some food poisoning, and they came back from lunch and started to sell everything. Or maybe not everything, it's not that bad. I'm being a little bit overly dramatic. But anyway, so if we have a look at the ASX 28, up 12 down, and we do know CSL is up. Yep, there it is. If we have a look by market cap, yeah, CBA down, but the next 4 companies, biggest companies in the ASX 20, all up. So it's BHP, CSL, Westpac, and NAB, but 4 of those are only up slightly, but CSL up 0.82%. Worst performing company, Aristocrat, and then WiseTech, Goodman Group, which is understandable because real estate's had a bad day, and the best performing company has been QBE Insurance. Look, I'm not complaining about that because I'm trading QBE Insurance, but what has happened? Why is that up 4.22%? Anyone like to explain why QBE is up a fair bit? No news flow. What about ING? Not ING. IAG. IAG, not ING. ING is Inghams. I'm just thinking of the bank I had my mortgage with, ING. ING or IAG is up 1.47%. What's the other insurance company? Is IAG, QBE. What about Suncorp? At one point, I don't know, no idea. By the way, QB chart is still looking pretty good. I did have a little bit of a drop, and look at that nice looking chart for QBE. Anyway, let's move on to the best and worst performing companies on the ASX. Actually, before that, I've been thinking of just doing a little, sort of a little like standalone videos on. What would I call them? On articles, like Livewire articles. For instance, let's go to a Livewire. Maybe not how to navigate the Trump slump. What would be an article I would like to, like finding the next market leaders and 2 stocks to watch. So like 3 high quality stocks to buy during the Trump slump panic. So I'd love to do selling videos on that and what I think about these companies that these sort of sites might be recommending. Here's that Jun Bei Lui. Yeah, Drill's investing 2 stocks for the bottom drawer and the only realistic scenarios left for 2025. And she said, the hard landing is off the table now, which I found extraordinary, absolutely extraordinary. Let's see if she says that. Yeah, here it is. At the start of 2025, there were 3 big picture scenarios facing investors: a hard landing, a soft landing, and no landing at all. Just 2 of those scenarios remain, with a hard landing now off the table, according to June. Well, I find that astonishing that someone could say that when, yeah, I think it's more on the table now than ever before. Maybe not ever before, but yeah. So I found this was a podcast and also an article. But yeah, I find that extraordinary that someone is thinking that hard landing is now off the table. I think it's more likely than it has been well, for a long, long time. Anyway, so this is something I've been thinking about and probably my focus on these sort of videos would be on Motley Fool, because the reason I was thinking this is because when I look at my iPad, I get all these articles. Just when I open up like a tab, I just get all these articles that for some reason, iPad, whatever, I forget what, I think it's either Firefox or Chrome. For some reason, Firefox or Chrome is recommending these articles to me, and quite a few of these from Motley Fool. Don't know why, because I very rarely look at them, but they've always got these little headings that are sort of that I can definitely understand why they might grab some people. I'm trying to find them. Like, guess which ASX stock is rocketing 51% after? No, not that one. It's just when they release articles that say these two companies are buys or something like that. And maybe I am thinking of just doing, I don't know where they are on their website. Maybe it's in a different section. The problem is I don't go to the Motley Fool website all that often. Maybe it's in trending articles. Let's have a look. Oh, yeah, articles like this. Why this speculative ASX stock could rocket 90%. So I've been thinking maybe I'll just do like standalone videos on this, and we'll have a look at this company called Lotus Resources. Now, usually it's based off or on the back of a recommendation from a broker. So here it is. Yeah, Bell Potter is bullish on this speculative ASX stock. So I've been thinking doing standalone videos on these. Anyway, leave your ideas in the comment section of this video. Would you like me to do that? Anyway, let's have a look at the top gainers today. And the top gainer today is Almonty Industries. Could have been the stock of the day if I did that. However, has come in number 2 behind Clover. The only reason it's come in number 2 behind Clover is because Clover did release half-year results. And I think half-year results, particularly if they have surprised the market, I'm more willing to believe that could be a catalyst for a re-rating in the share price. Almonty up 260% for the year. I don't believe the market cap is 54.74. I don't know why Market Index says that. I don't know if I believe that. Let's have a look at ComSec. It says it's 42 million in ComSec. What about TradingView? TradingView says the market cap is 691 million. Is this because it's dual listed? It could be because it's dual listed. Anyway, I'll talk about Almonty later in the video. Getting a little bit ahead of myself. That's Clover Corporation, share price up 18% on the back of their results. We can see some pretty good turnover, by the way. MTM Critical Metals, Nexus Minerals, but the market cap of these companies are quite small and nothing else much to talk about there. Let's have a look at top gainers by market cap. We have Codan, Vulcan. I think maybe uranium's had a bit of a bounce because I did see that a few uranium companies have had a good day, including maybe Peninsula. There it is, Peninsula, up 12.12%. So it looks like uranium's had a bit of a bounce. Drone Shield, another good day. Vista Group. Chart for Vista Group looks absolutely amazing. And for some reason, I just don't want to buy or trade Vista Group. And I think it's just because I think it's still a little bit illiquidly traded. Yeah, this chart's really good. Yeah, I'm not sure why I'm hesitant. And maybe that's my thing I can work on. When I do see a good chart, just buy it. Don't become hesitant. Don't bring your bias into it. Just buy this good-looking chart. But I'm not that keen on the liquidity on this company. But the chart looks spectacular for Vista Group. Anyway, let's move on to the top losers. Oh, by the way, let's go back to Codan. I noticed Codan was there. I had a look at this chart the other day, and the share price has dropped. So a nice little rebound, but this could be the end of the uptrend for Codan. Share price was going sideways for a long time. So maybe the uptrend in Codan has officially come to an end. I'm going to call it Codan uptrend officially at an end. Okay, so top losers, fairly small companies at the top of this list. A company called Income Asset Management, down 16%. I'm wondering if that's gone ex-dividend. The reason I say that is just below Income Asset Management, we have Helia Group, share price down 15.75%. You might be thinking, oh, the company has released something really negative. No, they went ex-dividend, and a pretty nice dividend, by the way. I am trading this. Had no idea they were going ex-dividend. I might have sold before today if I knew this. I should pay a little bit more attention to when companies going ex-dividend, because you see the share price is down 89 cents, and the dividend was only 69 cents. I don't know why. I think it's just franking credits. I think it's just franking credits why share price is down by more than the dividend. But yeah, I had a look at my trading portfolio and I saw this was down a fair bit. I thought, oh, they released something negative. No, they didn't. Just went ex-dividend. Again, dividends aren't free. You lose capital when you get dividend. Yeah, you lose capital when you get dividend. Dividends aren't free. I know some people find that shocking, but dividends aren't free. Anything else on this list? The reason I was talking about companies going ex-dividend will become a little bit more important when we look at the top losers by market cap. I saw Webjet Group here down 11.45%. I was not going to even think about talking about Webjet Group, but they did release some sort of strategic presentation or something. What was it? Yes, Strategy Day Investor Presentation. I opened it up and I went, the CEO of this particular company is quite attractive, and that's my first thought. And that's all I thought about before I moved on to the next company. And obviously, the market doesn't like what they saw in this Strategy Day investor presentation. Actually, I was wrong. By the way, here's the CEO. There he is, or she, Katrina Barry. I went, oh, she's quite attractive. But then I moved on, and there was one thing that did cause my attention. Yeah, our financial year 30 plan. For those who know anything about me, I love companies who have long-term plans. And they do have not a 30-year plan, and they did want to double their total, what is it called? Total transaction value. It's somewhere here. Here it is. Yeah, we have a robust plan to double TTV in 5 years from 1.6 billion to 3.2 billion. Okay, that's fine. That's fine. But obviously the market doesn't like something, and I'm forgetting which is which. So there's Webjet Group, and now there's also Webjet. This is the old, like the business, was it B2C? Like WebBeds is in the other business, I believe. And this chart does not look good. Webjet. So this is probably the part of the old Webjet I don't like, because it's the B2C. But if they do achieve those 5-year goals, maybe there's some value in this company right now. I don't know. Excuse me. And then let's have a look at top loser by market cap. And I'm wondering if some of these companies have released dividends. Like Universal Store Holdings is down 5.7%. So let's check. Let's check. Universal Store Holdings, did they go ex-dividend? You know what I could do? According to this, Comsec's got nothing there. You know what you could do is Market Index. I'm pretty sure Market Index has your upcoming dividends page. So we can just have a look here. So quite a few companies did go ex-dividend today. There's Helia Group, Parenti. Look at the dividend yield if it's here. No, it's not there. Oh, yeah, it is there. So Helia Group's yield is pretty big. What else? So Genesis Energy, CTI Logistics, Shariro Holdings, Pepper Money, LGI. Okay, so maybe not. Oh, by the way, Cochlear, A2 Milk's going ex-dividend tomorrow. Service Stream, Spark New Zealand. Not Universal Stores. Okay, what else is down today? Bhagwan Marine. I was trading that. I'm out. Out about 3 weeks ago. Okay, so that's interesting. I thought there was going to be more ex-dividend companies here, but it looks like there's only one. By the way, Pinnacle Investment Management Group. Some experts said this was a great bear market company, and I just had to question that. I would say this is the type of company or stock you would not want to be in a bear market. And you can see a massive drop in the share price because we had corrected. Share price has dropped from 27 to 18. That's a 33% drop in share price. And I would say this is fairly, I wouldn't say overvalued, but there is a really high, I suppose it's not that overvalued. I thought it was going to be more than 28.28. But definitely, if we do go into a bear market, this is a sort of company, like a fund manager sort of company. Is this a fund manager of fund managers? I forget. I think this is a fund manager of fund managers. And I don't see how this would not be negatively affected if we do go into a significant bear market. Anyway, let's go to the top 5 stocks of the day. Yes. And Webjet is not in there. But coming in number 5, we have a company that's gone into voluntary administration, a company called Bluechiip. Share price 0.3 cents. So the first question I would have is, why would you be in this? You might be positive about the potential of the company, but it's gone into voluntary administration. This was sort of interesting. So it was released at 3:45 p.m. So obviously they were in suspension. Yeah, so they've been in suspension for, how long? In fact, let's have a look at the trade history. So they've been in suspension since September last year. So not good. Not good to be a shareholder of this company. And the reasons, well, we know why they've gone to voluntary administration, but it's really interesting that they're mentioned here. The administrator was appointed after the company undertook a process to procure a strategic investor and or purchaser of the business. Following this process, the directors has resolved that the company is insolvent or likely to become insolvent and accordingly have appointed an administrator. There you go. Anyway, they've also mentioned in the forward-looking strategy, a bit of an aim is to attract potential buyers and investors. An advertisement will be placed in the media outlet, the AFR, with the possibility of using additional media channels or publications if appropriate. So, interesting to see what might happen, but again, why? Now, I've been following this company for a fair while, and when I say a fair while, I'm talking about over 10 years, and every single time they released, why am I going, I've already got it here. Every single time they release Appendix 4C, I have a look and then move on to the next company because they have never showed any momentum in the business. So receipts of customers, 545,000, operating cash flow negative. They've just failed to grow receipts over the last 10 years, maybe even longer than that. And I want to see growth in receipts and revenue because that is telling me the company is gaining some traction and this company just never did it. So there was no reason to even think about taking a position in this company just because of that. A little bit of debt, not a lot, but no need talking about this company anymore because they've gone into voluntary administration. And by the way, this chart is a chart of a company that you have to question, why would you be holding it? So let's have a look at the weekly chart. So I've been following this company probably 2013-14. So there have been periods where there's been a bit of interest in this company. You can see a really good uptrend from 2018 into 2020. Share price went from 3 cents to 18 cents. I can't remember why, but a lot of interest in this company. But of course, we know now they just didn't do anything with that increased interest. And since that share price high back in 2019, share price has been just in a pretty bad downtrend. And I suppose COVID-19 did not help. And share price has dropped from, 18 cents to 0.3 cents. So that's a 99%, almost 99% drop. So 90% drop would be, more than 90, about 95 to 97% drop. Anyway, so another company going to voluntary administration, but this is healthy. Weeding out the weak companies. It's funny to say, but recessions can be really healthy because they weed out the bad companies, the companies that can't survive, that won't survive. And if the government helps them survive, it's actually really bad for the economy because that means capital that could really help to grow those successful companies will be diverted. A lot of that capital will be diverted to these bad companies, and that's not good. So recessions can be really healthy, and I think the government and people don't understand that. It's really healthy. It may not be it may not feel healthy to those who are experiencing bad times during the recession, but they are healthy overall, and that's the main thing. Healthy overall. I'm not a big fan. I'll say this: I'm not a big fan of the government bailing out companies. I hate it. I absolutely hate when the government bails out companies. Just let them go. And the reason I do that is because if the government bails out companies, companies are more likely to do really risky things because they know, well, if we can do this risky thing, we can put all this, shareholders, we can do all these risky things because the government's going to bail us out. And I don't think that's healthy. Okay, so I've rambled on a little bit too long. Let's move on to company coming number 4, MinRes, or Mineral Resources. Share price down 4.18%. It was up a fair bit yesterday. No, the day before, 11.57%. And that was on the back of a broker upgrade. I still don't understand why people buy on broker upgrades or sell on broker downgrades. It just doesn't make sense to me. And typically, the hit or the sugar hit are short term. I've seen this time and time again. When share price rises after the broker upgrade, you sometimes will see the share price just drop back down. And on the flip side, when you see the share price drop because of broker downgrade, sometimes you'll see the share price rally, trade back up. So usually the effects of downgrades and upgrades are very short term. Now, I still don't understand why people react to them. Anyway, MinRes share price is down because one of their trucks fell over. It was not marked price sensitive. Onslow iron haulage operations. Now, the share price is not down because the truck fell over. They've paused operations to do an investigation. Interesting enough, the only times I've seen a truck tip over is during high wind events. So we're talking about post-hurricanes, and that was in Louisiana in 2002, 3 maybe? No, 2002. And also I've seen trucks tip over in the inflows of supercell thunderstorms, because the inflows into supercell thunderstorms can be really strong, which reminds me of that movie called War of the Worlds with Tom Cruise. Remember there was a big storm outside his backyard, and he says, it's really weird, the storms are moving into the storm. That's so unusual. No, it's not. You need inflow into a storm. You also have outflow, but you really need that inflow. In fact, the strongest storms have really strong inflows. So whenever I watch that movie, which is not that often, I just think that's wrong. Anyway, let's go back to MinRes. So they advise that haulage on the Onslow Iron Haul Road has been temporarily paused while the company engages with WorkSafe WA because, where is it? That the rear 2 trailers of a road train had tipped onto their side on the haul road. This was 2 days ago. The prime mover and first trailer remained upright, and the operator was not injured. The cause of the incident is under internal investigation. I doubt that is wind related. I doubt it. I'd be interested to know what happened here. What caused the two rear trailers to just tip over? Who knows? Who knows? Anyway, so the reason why MinRes share price is down, according to the experts, is because of this announcement, even though it was not marked price sensitive, which is unusual. Anyway, let's have a look at the chart for MinRes. Now, share price is down a fair bit. It's just above $20. Is this the buying opportunity? If we go back to like 2019-20, you can see share price of MinRes just going sideways. Just going sideways at around between about $12 and $20. And now the share price is back to that level. So is this opportunity to buy this company at much better valuations? That's the big question I have. I suppose a lot of investors have. Has the hype come out of this company? That's definitely a possibility. Now, don't forget they have lithium, iron ore. I think they sold their oil assets. I believe they sold those oil assets to Reinhardt. I could be mistaken. Anyway, they still have lithium and iron ore. And who knows, if lithium goes on a massive tear, MinRes could go on a massive tear. Even if iron ore goes on a massive tear, MinRes could go on a massive tear. If you have a look at the daily chart, I'm still not convinced this is a time to buy. I still remember back in September of last year, share price got to $30 and everyone was saying, oh, what a great buying opportunity. Share price bounced, went from $30 to $55, and now the share price is well below that. So the share price could keep on falling. So the big question I would have about MinRes, is this company high quality? I'd say probably not. And a high quality company share price won't drop like 75% in a short period of time. They're also a mining company, primarily mining. They do have mining services, but primarily mining, and I would never consider a mining company to be high quality. So for me, this is mostly a trading stock. And at this point in time, I don't see any shift in trend at all. Okay, coming in at number 3, we have Myer. I think it's called Myer Holdings. Yep, Myer Holdings, the company, share price only down 0.66%. It was down by way more earlier. In fact, the share price would have been down about 10% at the low today. So obviously, we have seen a bit of a nice little rally in the share price of Myer Holdings, and we're right at close of trading. In fact, if we go to market index, the market is closing in, well, not the market, the normal trading is closing in 13 seconds, which means it's almost 3 p.m. and then we'll go into the closing auction. It'll say here ASX in match. That's the closing auction. Here we goes. ASX in match. We're now in the closing auction. And you can see that just with Myer Holdings. We have the indicated price, and there's a possibility share price will be flat for the day. Anyway, so the company did release the results. I'm just going to go to, which one shall I look at? Appendix 4D? Yeah, let's have a look at Appendix 4D. Now, we did see revenue flat. We'll say revenue was flat. And if you just have a look at the numbers here on the first page, profit down a fair bit. So that needs investigation. So revenue's flat and profit's down. So that could be hinting at a decrease in margins. But there could be something else at play. Maybe there's a one-off. So I always like to have a look at why. And if we have a look at the profit and loss statement, so operating gross profit, slightly lower, but relatively the same. But you can see a big difference between operating gross profit and earnings before interest and tax compared to last year. And there's one big reason here why, and that's transaction and strategic review costs, impairments, and other significant items. So that's more than likely is a one-off. So if you add that back, you didn't see much of a drop in profit. What else? Finance? No, not finance costs. No. The rest is pretty similar. A slight increase in selling expenses and administration expenses. Slight increase there. So that's another reason why profit is down a little bit. So yeah, margins are slightly lower. If you have a look at, this is very important as well, I always like to have a look at the balance sheet. I like to have a look at debt. So they do have a little bit of debt. Also have a like to look at total equity, $266 million. Yep. So equity is fairly low for this company. So the markup of Myer would not be that high. So just based off equity, I would say the markup of this company might be 300, 400 million. So let's have a look. 1.27 billion. Okay. So this company is trading on significantly greater than the equity. I'm surprised the markup is 1.27 billion. That is surprising. I thought it'd be much lower than that. Anyway, so let's go back to operating cash flow. So cash flow. This is really important because the operating cash flow is 213.6 million for the first half year. If you compare that to the markup, it's trading 6 times half-year operating cash flow. Now, the first thing I would say is this company is probably seasonal. Their performance is seasonal. I tried to confirm that in FinChat, but for some reason, FinChat doesn't like or did not like looking at half-year numbers. I could look at full-year numbers, but when I went to half-year or semi-annual, it went back about 10 years. Yeah, went back to 2007 and 2008. Anyway, so if we go back to what I was looking at just before, I'll come back to this in a second. It's very important to understand that there was a change in accounting standards maybe 5 or 6 years ago where how companies treated leases and now leases are in the financing activities. I'm not an accountant, but I do believe leases, even though they recognise it as a debt, that sort of thing, I do think it should be included in operating activities, because if you're a retailer and you're renting out a store to sell stuff, why is that not a part of operating activities? It just doesn't make sense to me. It's a real cost for all in operation. So I always reclude lease liabilities or leases in the activity section. So if you do that, that means the operating cash flow of this company is only, say, where is it? About 140 million for the quarter, which sounds pretty healthy for a company that has a market cap. I thought it was like 400 million. Now it's 1.2 million. So not quite as healthy. Now, the other thing is, I do think there is seasonality, and I would say the second half for Myer, their first half finishes on the 25th of January, by the way. Weird date to finish your half year. Their second half between January and July should be fairly less significant. You'd say sales, the majority of company sales, retail company sales, should be in that first half between July and January, because Christmas. Hello. You can confirm that just by looking at the half-yearly numbers, but can't do that in FinChat. It's disappointing. I wonder if I could do that in Guru Focus. I do have it here, but Guru Focus doesn't allow me to look at stuff now. Let's have a look to see if it does. Myer, there it is. 30-year financials. And I want to look at, yeah, we only have a few years. Semi-annual. Oh, we've got semi-annual right there. So they got the revenue per share, which I really like. But I want to look at revenue. I want to look at revenue, not revenue per share. But there's definitely seasonality. Just by looking at revenue per share, there's definitely a fair bit of seasonality with this company. So I would expect the operating cash flow of Myer to drop significantly in the second half. In fact, what we could do is just have a look at last year. Yeah, let's do that. Let's have a look at last year. We'll have to go back 2 years. This is really exciting. We'll have a look at the half-year operating cash flow, and then we'll have a look at the full-year operating cash flow, just to compare the two. So last year, the companies, this must be the full-year report. We'll have a look at the half-year first. Here we go. So last year, they had $218.7 million in operating activities and also 74.7 in lease liabilities. So in my opinion, the true state of the operating cash flow was $140 million. So let's have a look at their full year results. And I think you'll definitely see a bit of seasonality here. We're in the director's report. All notes, so it means we have to go up. There we go. We're in the right section now. At the balance sheet. And this should be cash flow. There it is. Okay. So 144 million operating cash flow for the year and for the half year, for the good half year, for the half year where people are spending a lot of money. For the full year, the operating cash flow was $90 million. So in fact, they were operating cash flow negative by $50 million in the second half. So this does make sense. So this company is definitely seasonal. So don't look at the half year. You have to know that this company is definitely seasonal. So shame on you, FinChat, for not letting me able to do that. I really wanted to show how seasonal this company is, but you need to break results down in half-year increments. And for some reason, I couldn't do that in FinChat. Some reason it just wouldn't do it. Whenever I clicked on the semi-annual, it just went back to 2008, 2007, 2008. Anyway, so whatever. So let's move on to company coming in. Number 2, we have Almonty. AII. Almonty share price up 34.5% on a strategic partnership with American Defense International. Now, is one reason why this is not my favorite type of announcement, and that main reason is I just don't know how beneficial this will be to Almonty. I just don't know because there's no financial numbers here. I like to see financial numbers. I like to see numbers, but this is definitely a positive announcement. There's no doubt this is a positive announcement. So Almonty is leading global producer of tungsten concentrate. They're also, I think, moving to United States. They didn't mention that in this announcement. So they're pleased to announce that it's entered into a strategic partnership agreement with American Defense International, a prominent government relations and business development firm based in Washington, D.C. So this is a significant step in strengthening this company's strategic positioning within the critical metals sector to support the U.S. federal government. Alongside the company's ongoing redomiciling to the United States, a collaboration with ADI will enhance engagement in the US market by reinforcing the company's alignment and support of government policies and industry priorities. So obviously this will be beneficial for Almonty. I just don't know how much. Now, the market is keen. Share price up 34.5%. Share price has been on a significant run as well. Now, this company is dual listed on the TSX and the ASX, and maybe others as well. Maybe. So share price has been on a bit of a run lately. And when I say run, I mean the last 9 months. It does look like it's illiquidly traded. That liquidity is improving. You're starting to see pretty big volume coming in. And I think the liquidity may have been solved, or the liquidity issues may have been solved during the past few months, because we definitely have seen that rise in volume. So, and the share price now up to 230. This time last year, the share price was 70 cents. So share price has more than tripled in the last year. And all that rise was back in January, over like a maybe a 2-week period. Anyway, so that's Almonty Industries coming in number 2. Could have been number 1 if Clover Corporation didn't release their half-year results. Share price only up 16.9%. I think this could be interesting. Not a breakout. That was the one disappointing thing when I had a look at the chart. I liked the numbers, liked the results. Then I had a look at the chart and went, not a buy for me. Oh, look at that. ASX status, CSPA. I don't know what that means. Just want to Google that. Closing single price auction. There you go. There you go. Is a phase that occurs between 410 and 411. That's probably why I've never seen this before, because it only happens for a very short period of time. Very short period of time. I've never seen that before. There you go. So it's probably changed by now. Let's go. Let's have a look. No, it hasn't. Well, the closing auction has finished. And that hasn't changed. Let's have a look at Myer. No, it hasn't changed. Let's go back to Clover. Okay, so this company was a market darling. I'm thinking between 2015, 18 or 19. A lot of interest in this company. That's fish oil. If someone asked me what this company does, I'll just say fish oil, like omega-3 fish oil. They might do other stuff, but that's what I think of Clover Corporation. They sell or manufacture or produce omega-3 fish oil. Anyway, and the company's financials were looking pretty good. Went through some troubles. I don't know what caused the troubles. Maybe less demand for omega-3 fish oil in China. I don't know. Share price fell a fair bit. Hasn't really recovered. Share price has dropped maybe, I'm just guessing, 90% since the highs. Or maybe not 90. We'll say 80% since the highs. And maybe now is a time to start thinking or looking at this company in a little bit more detail. Fairly small company in terms of markup. So currently about 60 million, 68.47 million. So keep that in mind as well. So let's have a look at the numbers for this company. So I always like to have a look at these sort of companies because it doesn't have to take a lot. All it takes is a bit of a turnaround, and you could see the share price of this company increase 200 to 300% in the next few years. So revenue up 38% to 37.6 million. Nice revenue in half year. Gross margins increasing as well, up 270 basis points. So revenue increasing, gross margins improving as well. EBITDA from 0.3 million to 4.3 million. This is another reason why if like EBITDA or profit is on a low base, you can't really look at price to earnings. It gives you a misleading number. Now, the price to earnings of Clover has now improved to positive because last half year, the profit of this company was negative 0.6. Now it's positive 2.4. If you expect this momentum to continue, just say doubling the profit, which you should never do, doubling the profit. So analyzing half year profit's just an awful thing to do. But if you did it, you could say this company has a profit of $5 million, market cap of 60, was it 68? So it's trading on 12 times earnings. Anyway, there is potential if this momentum keeps on going up. Their profit in the second half could be 3 or 4 million, which means, yeah, the company's trading on a P ratio of like 10. Strong balance sheet with cash of 15.5 million. That's the other thing I noticed. This company has a fair bit of cash compared to debt. So the enterprise value of this company is more like 50 million. Makes them even more attractive. New distributors across North America, Asia, and Europe. Commenced crude oil deliveries. I don't think that's crude oil in terms of the oil we're thinking of. I think that's fish oil. And also dividend paying. There you go. So Clover Corporation leading. Oh, that's right. Infant formula. Yeah, now it's becoming a little bit more. My memory's just been sparked. One of the reasons why the share price fell a few years ago was because of infant formula. But anyway, innovative nutritional ingredients, provider of innovative nutritional ingredients to the global food and infant formula markets. But I'm pretty sure it is fish oil. So the numbers looked really good. I had a look at the financial statements. I liked it. Had no reason to be operational performance. I didn't have a look at this. Oh, there we go. Ecuador, the extraction of crude fish oil from tuna heads continues to gain momentum. Interesting. Getting fish oil from tuna heads. There you go. And they're talking about omega-3. Yeah. So again, if you ask me what this company does, the first thing I think of is omega-3. In the outlook, I actually did not have a look at this. The board expects the momentum to continue with a stronger second half, assuming current forecast demand and the global conditions prevail. So things look pretty good for Clover Corporation. I did not have a look at the presentation. We'll have a look at that later. But let's have a look at the chart because this could be a breakout. That was actually my first thought. Ooh, this could be a breakout. And I had a look at the chart and I was disappointed because, yeah, unfortunately, share price has been in a bit of a downtrend for quite a while. Share price did reach a high of, I think it was $3 maybe. Yeah, $3 back in 2019. $3.25. So share price has dropped a fair bit. And the last really bad period was back in March of last year. So that was when they would have released their results, half-year results. So share price dropped 22.98% on the day they released results. And yeah, it looks like that was the last time the company released bad news. I'm pretty sure they did release some positive news back in September of last year. Share price rallied 24% in a day. That positive news did not translate to the chart, and share price actually kept on falling. Is this a turnaround? Yeah, some good volume coming in. But again, the problem with this sort of chart is even if a company releases really good results or really good news, because so many shareholders are in the red, they're underwater, they see the share price rally and they just sell. A lot of enthusiastic sellers. And that's why I want to see the share price at least a 3-month high, preferably 6-month high, even more preferably 1-year high, because you don't have those underwater holders, less resistance moving forward. So that was one little disappointment when it comes to Clover Corporation. Love their results, love the outlook, I love the enthusiasm in the management, the momentum, potential management, like the valuation, no complaints. It's just the chart. So I'll be waiting for signs of the chart turning positive for Clover Corporation. Okay, I've been talking. I didn't realize I've been talking for so long. 50 minutes. Jeez. I'll mention one of your comments. Why not? Promotion 000 says they did buy some New Hope today. Wonder how New Hope went today. I did notice there was a positive recommendation or broker upgrade or something. Share price up another 4.22%. And this was on the precipice of breaking out, I think, if I remember. No, totally wrong. No, I'm now remembering. This was not on the precipice of breaking out. Share price had dropped a fair bit. And yeah, no interest in the chart for this one. Maybe valuation, that's about it. Now let's go back to the question. My last two buys have been very bad. BRK, which is Brookside, making good money, yet still went down. DGL, unfortunately, didn't wait for the half yearly. Yeah, DGL, disappointing. I was an owner of DGL, not anymore. With DGL, I've just decided to wait until they show some signs of turning around. Brookside, I'm just disappointed. Management are just focusing on taking their cash flow and just spending that cash flow and drilling, that sort of thing. I just wish they would focus more on cash generation, which is weird to say. And the reason I say that is because I think the market just wants that at this point in time. Anyway, so I'd love to see Brookside become more cognizant of what the market is thinking. That's why the share price is down, because this is another company that has a really good outlook. They have plans, and if they do achieve these plans, this company is really cheap at these levels. But the market's just not convinced on Brookside just yet they can achieve those plans. And I think one of the reasons is because they have really good cash flow, but then they spend all that cash flow on drilling and that sort of thing. So anyway, now back to your question. Hoping you might give some insight to a few I just bought, RemSense and HMY. Is that Harmony or Harmony? Harmony? Would love to know your thoughts. Keep up the videos. You're doing a good job. They really do help bad traders like me. I wouldn't call anyone a bad trader, because at least you're doing better than most people, because most people aren't trading at all. Anyway, would you call yourself a trader or an investor? I think that's a pretty big question. There is a difference. Would you call yourself a trader? If you're a trader, I won't look at the companies themselves. I just have a look at the charts. So let's have a look at the charts, because for me, trading is about technical analysis, a little bit of fundamental analysis, because that does sometimes drive the share price higher. It does and can change the sentiment in the company. So fundamental analysis is important. I think it is wise to understand how fundamentals work. And when I say fundamentals, I'm talking about news flow, announcements, that sort of thing, and even financial statements, financial results, that can drive the share price higher. But when it comes to trading, I would say, for me personally, trading is all about technical analysis, mostly. So let's have a look at RemSense chart. Okay, so yeah, remember this chart. Probably my philosophy now on trading is trying to stick to the bigger companies, not the huge companies, but bigger companies. And I'm more likely with companies like RemSense. What's the markup of this company? It says 10.82 million. Is that right? It says it's 10.82 million. These sort of companies, I'm more willing to hold them for the longer term, but only if I do see some financial traction. So with Bluechiip, no financial traction, voluntary administration. I want to see a bit of financial traction when it comes to RemSense Technologies if I was going to take a position in this company. So more than likely, I would not trade this. I want to see some traction. So even though I just said I'll only look at the chart, I'm just going to have a quick look at the most recent companies, Appendix 4C. They did release half-year results, but I prefer to look at cash or quarterly cash flows. It's just a preference of mine. And by the way, you can still see their full-year cash flows in this particular Appendix 4C. So they do have receipts, 1.18 million. Receipts probably are growing based off the quarter receipts in the 6 years. Operating cash flow positive. Straight away, that's interesting. By the way, I did write down, where is it? I did write down all the companies I wanted to have a closer look at in January, companies that did release Appendix 4C and 5B. And RemSense, they released it on the 29th of January. Yep, and RemSense is on my list. I've not gone through any of these companies yet, so I'm taking my time, but RemSense is on my list of companies to have a closer look at. And the main reason behind that is they were operating cash flow positive. And that could be the driving force behind the share price rising. One of the driving forces. And that makes this company way more interesting to me because they've possibly hit that inflection point. Other than that, I have no idea what the company does. I've probably looked at this company before, but I can't remember what they do. When I say looked at, I mean a close look. The other one is Harmony. This is a bigger company. I would guess this company has a market cap of maybe 50 to 100 million. 43.85. Damn it. Harmony. Financial services. I'm pretty sure they deal with debt or loans. Not debt, loans. I suppose loans are debt. Let's have a look at the chart first. Geez, the share price has dropped like a rock. Share price has dropped from 80 cents down to 42. I'm not sure why. Share price rallied significantly on the 20th of February, and that must have been results, up 26.36%. And look what happened to share price after that. So that looked like a breakout, and that breakout turned nasty fairly quickly. And it's unbelievable. Share price is now lower than it was before that potential breakout. So this is a little bit of a different company. I would assume maybe they're on the precipice of becoming profitable. Let's have a look at the announcement. Why not? So they are profitable, 0.7. Oh, look at that. They have a target, financial year 26 target. They're aiming to have $10 million of profit in 2026 and return on equity of 25% plus. So if this company achieves those goals, this company is dirt cheap. So the most important word there is if the company can achieve these goals. So I have not had a look at Harmony just yet, but this needs closer attention. So interesting for Harmony. Now, this company does not release Appendix 4Cs. I'm just double checking that. Yep. So yeah, I have not had a look at their results at all. And I can definitely see why the market got excited on that day. What has caused this pullback? Don't know. Just a little bit of negative sentiment in this sector. Don't know. Anyway, I don't mind this one, but the chart, this pullback this does concern me. But this could be, if you believe this company can achieve their financial year 26 goals, this company could be a sort of company you'd take a position in, like a small position, and then if they do achieve their goals, that position could grow significantly. Okay, as school children are now arriving home, I'm going to end the video right here. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.